Alright, so it has been a long time that I made any video. I'm making this video after maybe some months just because of I had the feeling of to record something just to tell you guys that how do you simply read a chart. The basics always remain same. So the first important thing whenever you read a chart or whenever you are planning to take an entry is that you need to keep the things very simple. Right, that is one thing. Now we'll discuss in detail in a very simple approach that how to interpret a chart, how to consider it for a buy. And the most important thing which you always need to keep in mind is whenever you are trading as a swing trade, you are wishing that the stock goes up. So the first and the foremost thing which you always need to consider is that don't bet against the trend. Now let me show you very simply how you can develop a setup which is very clear. On my screen you can see only three moving averages. Some of the earning breaks also you can see which we can remove just for this video. Now if you see this, the chart is very clear. We are into open market. The markets are live right now. I took an entry into this stock. I'll tell you the rationale why. Now I'll keep it very simple so that any one of you can understand that. So if you see the moving averages, there are three moving averages plotted. It is my personal indicator which gives us the option to plot 5 moving averages at once, but I'm just using 3 from a long time. So these 3 moving averages are, if you see yellow, peach, you can say green and white. So it's 9, 21 and 50 moving average. Now this is a weekly time frame. I always say that if you're getting a confirmation on a bigger time frame, say a weekly time frame, so there are high chances that things will work out on the smaller time frame. So first of all, if you see on the screen, let me remove the magnet first from here so that it doesn't disturb us. Where is it? Yeah. Now, what was the rationale behind entering into the stock? Why I considered it a buy and why I considered this to be a good opportunity? Even after so many analysis, so much analysis, the stocks might fail. They do fail. But the point is your analysis should be such which convinces you that this is a buy. Now if we see this chart on a weekly time frame alone, then we'll go to the daily also. Since this period, the chart was entirely below the moving averages. 50 was way above. It was every time facing resistances from 9 and 21. It tried once over here, it tried once over here. Right. So at this point of time, if you're considering anything to buy over here or over here, those are bound to fail because the trend which I said is not with you. It's overall down. These are just false breakouts, or you can say dead cat bounces, which the retailers usually get trapped on. Now what changed with time in this chart? Now you must have seen over here in this phase over here. In this phase, the chart tried over here, slightly failed, then it from this zone over here, which I shall change the color for you. From this green zone, if you see, the stock started remaining above the moving averages, correct? Now this is the where the you can say the nature of the stock is changing. Then if you see in this green zone over here, the stock is again keeping or staying above the moving averages. And moreover, now it's getting tight over here. It's not even touching the 21 MA, that is the EMA, sorry, which is the 21 EMA is the green moving average which we have, and it's getting very tight. So if you understand that weekly is giving you a confluence over here, weekly tells you that yes, the structure of the chart has changed. Okay, let me remove this now. Just a minute. How to remove this? Okay. Now on weekly you have in mindset that the bigger time frame is with you. I took an entry at 120.35. Okay. Now if you take an entry on the weekly basis and you keep a stop loss, say you are trading just the weekly time frame, the appropriate place to keep a stop loss will be, let me tell you, if you are trading just the weekly. So why I just don't trade the weekly, but I make sure that whenever I trade, okay, I have that weekly confluence with me. Now right now my stop loss, if you can see, is 2.8. Right now instead of 2.8, if I'm trading just on weekly, my stop loss somewhere should be, let me just give me a minute. So if I just, it should be somewhere down the swing low, right? Or maybe below this candle. So stop loss approximately doubles or more than doubles. So that hampers my position size. If I am willing to take a risk of say 10,000 at 3% stop loss, at 6% stop loss, I'll be able to take only a stop position size which gives me a stop loss of 5,000, right? Maybe half the position, you understand that. So that's one of the reason why I don't just trade the weekly. Excuse me. I just get a confirmation on the weekly. Now let's remove all these drawings first and see what I saw on the daily time frame, which also resulted in giving me a smaller stop loss. Now you have it in a back of your mind that yes, the time frame weekly is giving us a confirmation. It's staying above the moving averages, and this confirmation is not one time confirmation. It is a confirmation of so many months. If you see the months over here, if you just see the months over here, let me just show you. It's since June till now, means it's more than 6 months. This stock has proved that the intent or the nature of the stock has changed, right? Now we know this for a fact that the stock has changed. Now let's go to the daily quickly. Now if you see over here, that's clear base which we see on the weekly. If you remember, this was a small base which was there on weekly. That's why weekly I always prefer, because it reduces all the noise. Now again, what's happening over here is that stock after, like, you see a lot of noise over here. The stock after going below this moving averages, now it's trying to come up again on this. Now if you see this, the stock is forming a pattern somewhat like this. Now I have taken an entry today considering that the projected volume over here is 2.3x. We are already trading at 1.58x of the volume. That's pretty good volume. More so over this sector, financial services, is right now one of the most hot sectors, along with autos, along with metals. So that is what I consider when taking an entry. Now I took an entry over here. Now next day, say the stock reverses. Now the reason why I took an entry over here, that it got tight over here and it's starting moving up for an anticipated up move, will immediately get removed, or you can say will not be there, right? So if I keep on holding this position below the swing low, I might get trapped into somewhat this kind of price correction, or time correction or price correction, and the stock move down. So the reason for keeping a stop loss just below this candle is very clear. And most importantly, if you see, I'll just remove this now. So I'll remove this drawings again. Last part of the video, but very important. Now if you see, the stop loss which was coming on the weekly, which was 6%, is right now coming to 3%. Now this helped me position size better. Now, having all this analysis done, someone will say that you have done the perfect analysis, then why does the stock fails? Because it's probability. And you need to play that probabilities over a bunch of trades, not only one trade. One trade might give you any random outcome. But if you're planning and playing one common strategy, which you know works over a bunch of trades, so overall you will come out profitable. So this was the reason behind buying the stock. The video is 8 minutes long, but honestly the concept which I told you is so simple, so stupid simple, that anyone can apply it. Now take it for an example. The stock creates a candle like this tomorrow. Okay, this is just an example. Like tomorrow it happens to be a good day for us. The stock moves up and creates a candle. So there will be few thoughts. One, who didn't bought it yesterday will be thinking, should I buy it? So answer is no. Never buy into FOMO. As a trader, you should make a point that you protect your capital first. A market moves this way, and as far as goes from the swing low, like this is the swing low, the chances of having a pullback increases. So FOMO buying is not suggested. You should be perfectly timing the stock as per your analysis. Even then the stock can go hit a stop loss, but you should from your side create a proper risk management plan. You should not buy it tomorrow. This can be an ideal entry. This can also be a late entry, but I'm not still buying it when the stock already zoomed, move up the obvious highs. So I won't buy it. Right. So this is an early entry which I have tried to keep so that I can manage my risk better. Second thing over here is that how do I manage the risk from, like, how do I book this trade? How do I know that when is the right time to book? No one knows it, but there is an answer to it. There is a plan to it basically. Now, if you see on the chart, if you see my this, what I'll do, I'll just move it to 1:2. So whatever chart I share on Twitter also, my risk reward ratio is set this way only. Whenever the stock moves 1:2, there are two options with you. One, you move the stop loss at cost and you leave the entire position size to run. This situation is ideal when the entire market is very healthy. Means you don't get major pullbacks, the market itself is trending upwards. This is a option which you can take at that point of time. It's not that you can not take, like stock don't run when the market is not that healthy, but there is no environmental push with you. The another option can be when it moves 1:2, instead of moving your stop loss to cost, you can also book 50%, 20%, 30%, whatever you feel appropriate, some part of the quantity, and then move the stop loss to cost, or book 50% and then leave it with the original stop loss. So even if after booking 50%, if it hits your stop loss, which is 3% in this case, you are still coming 0-0. That is no profit, no loss. A little of brokerage, but in swing trading, most of the discounted brokers, like I use Zerodha, they don't charge a huge brokerage. In swing trading, it's okay, it's manageable. So these are the ways wherein I try to manage the risk, wherein I try to take some profit off the table. That also very important. Now say it goes 1:2, I don't book anything, I move the position to cost. It goes 1:4. There I'll certainly try to book some of the quantity. Because when it moves 1:4, say it's moved 1:4, let's say 1:4 is how much percent? If it moves 1:4, it will be roughly 11%. So when a stock generally moves 11%, if you see the history also, it retraces for some time. Even if it doesn't start a new downtrend, if you see from this swing low to this swing low, it was 11% only, 12%, right? Now from this swing low, the next swing low to this swing low, it is again 11%. So the basic nature of stocks remains the same. So when it becomes obvious that you should book in strength, you should book it. Don't sit in a hope that your trade will run 100%. For running 100%, that is possible, but it will drop every time 5-10%. And if you are willing to take that risk, or you are courageous enough to take that risk of 5% drawdown just to achieve that 100%, means you are a positional trader, more of a positional trader, not swing trader, then that approach is correct for you. But if you are trading as a swing trader, it's very important to take some profit off the table, manage your risk well, because your capital, if it is safe today, then only you can take another trade. I have few stop losses at, I don't care, because when my trade work, 1 or 2 or 3 will work, it will compensate for the stop losses which I took, because my stop losses are very small, which I call as sniper stop losses, and that will, one winning trade or 2 winning trades will compensate maybe for my 8 to 10 losing trades, and still I can come out profitable. So that's the approach, that's the mindset. And if the environment gets healthy, your 2 to 3 trades, profitable trades, will certainly increase to 4 to 5 out of 10, and that is the time when you make money, and rest of the time you save your capital, manage your risk. I hope you like this video wherein I try to explain you that how to manage the risk, how to find stocks. It's not about this stock which is a financial stock, it's about any stock which you trade should go through these kind of studies, be it sector, be it strength, be it change of nature of the stock, be it how to manage the risk, be it how to book profits. If you like such descriptive videos, do let me know in comments. I'll think through and make such more videos, but the concept remains altogether the same. I can just tell you a mindset, but the concept will remain altogether the same. Keep it simple. I'll see you guys in the next video.